in 1975, if you invested $100 into Moody's, today it would be worth over $2 million. And why do I say this? Well, I'm going to be going through how Guy Spier uses this knowledge to basically find very similar opportunities in other less developed countries to take advantage of this effect. So a great example of something that he's managed to do is he's basically managed to look at great businesses that have done very well and generate significant returns to shareholders because of a certain moat or characteristic they have, and then basically gone on to leverage that knowledge and find those opportunities where they haven't been developed or haven't been recognized for the great businesses they are. And the example with Moody's is because that Moody's is a credit rating agency, which basically means they assess the quality of credit, they put their stamp on it, and then investors know what the rating of this credit is, and then they go off and buy it. And it's vital if you want to sell any of your debt. It's basically a cut on all the world's debt, or in that particular country at the very least, and you're basically paying for a brand. It's a very high return on capital business because you don't really need much for your brand. You maybe need a few people to underwrite the credit, but really that expense is just because they're paid well. And this has been a phenomenal business, done very well as mentioned by the intro. But what Guy Spier has managed to do is he's managed to look at that and then look into other segments. For example, CRISIL is an amazing business because it's the exact same thing that's happened with Moody's. They've managed to do over in India. And the reason why these credit rating agencies work really well as well is because it's a brand. You're probably only going to have 2-3 major players in that market that really will put their stamp of approval, because it'll be universal. It'll be like a hallmark. It'll be like Uber. You're not really going to have room for 10 different other credit rating agencies, because it's going to be too much of a faff to have to learn, for other investors to have to learn their credit rating system, get familiar with that rating agency. So it's really the main players, as long as they don't mess it up in any catastrophic way. And I mean, Moody's and Fitch and the rest did actually mess it up in 2008, 2009. And yet even they still sort of came out unharmed if you look at them today. So you'd have to do something even more disastrous than that, really, than completely mislead investors in 2008 and 2009 with these mortgage-backed loan securities. And if you're able to find those kind of opportunities, you will be able to generate those kind of returns. So yes, you may have missed Moody's, and yes, you may have missed Fitch, but there will always be other opportunities in other markets. Another sort of great place to be has been sort of like the likes of Robinhood has been a great return asset historically. It's done very well for investors. A lot of room to grow. There is quite high operating margins within that business. And if you were to identify sort of international businesses which are doing just the same thing but aren't respected as well as the likes of Robinhood, etc., then you are able to generate some significant outside returns. For example, an interesting one that I personally looked at, though it's not investment advice and it's not something I necessarily hold a position in for full disclosure, is XTB in Poland. And actually, at the time of looking at the business, I think it's still more or less in line. The business was trading at a forward PE of 12 times earnings. Whilst earnings multiples in Europe are generally lower, it was still a great valuation, so 12 times earnings. And then on top of that, this business has historically been growing 20% year after year after year after year. And I don't really see that slowing down, particularly as they continue to expand abroad into other European markets. And on top of that, as they continue to increase their product offering and become more seen as more of a serious player rather than just someone that offers CFDs, rather than actual sort of securities and equities that you can trade, or stocks is another way said it another way. So I think there are real opportunities by finding sort of these businesses. Another one in India has been Indian Energy Exchange. That has been been a phenomenal business. And you could have seen that. I mean, even just even a great friend of sort of Guy Spier's, Monish Pabrai, sort of talked about how he has made 100-bagger returns by investing into the postal service of these private companies in India and investing into the main ones. And that's because it was obvious that with where India was going, that the demand for sort of postal services is going to be huge. On top of that, the services in India were particularly poor, the government ones. And on top of that, and then going back to Guy Spier's sort of framework, you can see that these type of like FedEx, etc., has done very well in the US market, and it's generated significant returns for shareholders over time. So that is something that you can apply to your investing and look forward to. So if you can find a particularly attractive business model and become quite experienced in it, if you can find similar variations of it, even in the same country, potentially it's just in a different market, it's the same thing but in a different market, for example, or if you can just simply find the same type of business model in a different market, as in different country, I could see myself doing very well with that. So I think it is something worth considering and a strategy that Guy Spier has done very well with.